you did. But let's just start to make sure we all have a common understanding when we're talking about impact investing, what we mean, and how it may or may not be different from socially responsible investing. What does it mean to be a negative screener? What does it mean to sort of be positive, proactive, and looking for impact investments? So I think that's a question that everybody can address, perhaps from your own particular bias.
I would just say, I mean, where we generally enter in the world of feedback is we think you can spend a phenomenally large amount of time counting lots of angels on lots of pins in terms of nomenclature without necessarily a phenomenal effect. And I think we're partially to blame because there was a whole small set of folks where that term impact investing did come about in large part to distinguish it from socially responsible investing. I think that's where a lot of the origin of the term came from, to say that the idea is to have more of a deliberate positive impact kind of crafted to someone's objectives as opposed to necessarily screening. And it's overly simplistic. There are a whole lot of issues with it, but I think it's been a very, I think, effective and powerful brand to build attention and focus, and has gotten a lot of resonance. And I think it's easy to sort of belabor the differences as opposed to saying the reality is when we work with institutions and individuals, the terminology in their head is all over the map. And for us, getting to perfection is actually not so constructive. And I think for us, it's much more fundamentally, why are you doing this? What are you trying to do, and how do you do it well? As opposed to, what do you call it? Trying to persuade people to change their terminology as opposed to figuring out what they're thinking about and how they do it well. It just, I think there's a lot of distraction that can be had there.
Yeah, and Parnassus is we're definitely on the side of the spectrum that is more or sort of less activist in terms of our approach to impact investing. We've had our own evolution since '84. So as I mentioned earlier, we do spend most of our time now on looking at these ESG factors, and we're also starting to work with companies and really trying to push them on certain issues. I'll give you an example. We have a small cap fund, which is about $600 million, and there's about 40 companies in the portfolio. And we, together with 10 other investment companies, wrote letters to all of our portfolio companies explaining what we wanted to see from them from the standpoint of reporting on ESG factors. And we got three responses back out of 40, so not a very large number, but we're still working on the others, the 37. But the three that got back to us said, thank you very much. We've been looking for this kind of guidance. We don't have a very large investment relations team, and they certainly don't have a sustainability team. And these are companies that are worth $1 billion in market cap. And so we've been working directly with them, and that's a way that we can bring, kind of leverage our shareholder base and the assets that we manage, and really trying to make a difference. I mentioned earlier we work with NGOs on certain issues as well, and voting our proxies in certain ways. So, we are evolving as well, and it's great to work with folks like this on the panel, because we learn a lot from them, and we're always trying to focus on what we do best, which is the sort of the performance of the funds and the alpha generation. And when we can, we'll pick our spots to make an important impact as well.
From our perspective, both at the foundation and Impact Assets, so first of all, we've been asked a lot about definitions, and I would say that first off, for me as a foundation, an impact investment is just that, an investment, not a philanthropic grant. So it's not a recoverable grant, it's an investment that would live on our portfolio and for which we would expect a financial return. Doesn't need to be a full market return, but we need to expect a financial return. The other thing for us is that we focus in on what is kind of the new frontier of the market, which is private debt and equity. It's areas like microfinance or low-cost private schools in the developing world, or fair trade supply chain financing for co-op farmers, are three things that we do. Things that aren't yet available and at scale enough to be done in the public markets. We certainly hope and expect they will be at some point, but today the only way to get access and put capital there is through private debt and equity, and that's a very opaque, non-transparent market. So in Impact Assets, what we focused on is identifying managers, and we've developed something that we call Manager Impact Capacity, which is all about, is the impact intentional or accidental? And what we look at is the thesis of change at the firm level and in the investment level, that if we do this and invest in this way, we expect this type of positive outcome to occur, and then what measure is there to determine whether or not it's actually occurred. There's some wonderful things going on in the industry today to measure impact, the biggest of which is called the GEARS initiative, run by the same folks that created the B Corp concept. It's very much in its infancy. There's about 40 firms, including many of ours, that are pioneering it, but it's going to be several years before that's fully developed. So today what we look at is, again, does the firm understand its mission? Do they understand what they're trying to do? Do they have a thoughtful approach to A plus B can potentially equal C? And then do they have a process in place, however rudimentary at this point, to measure it, and are they following up with that process?
So I think I'm going to have the biggest tent here. So if you remember that commercial, this is your brain on drugs. So sort of like traditional investing. So this is your portfolio, and this is your portfolio with impact. And what these impact glasses give you is a deeper sense into risk and opportunity. Because that's, I think, the common theme about what we're all saying here is there's either new opportunities in serving base of the pyramid markets. You know, we're at 7 billion people now, growing to 9 billion people, in being aware of potential changes in environmental conditions. You don't have to, care if climate change, who causes climate change, but there are some factors environmentally that are happening. There's increased transparency happening, so because so many decisions have been made behind closed doors, people want to see a clear view. So you can either invest your portfolio like this, and if you don't have perfect vision, have to be aware of moving your car to the left or to the right, or you can do it with a clear sense of risk and opportunity. And that, to us at HIP Investors, that's really the clarity that we're trying to bring with it. Every type of deployment of money, for profit or nonprofit, debt or equity, private company, public company, has impact. Some are more positive, some are more negative. Some are a higher degree, some are a lighter degree. So we have these 5 categories called health and wealth, earth and equality, and trust. They're based on Maslow's hierarchy of needs. So health, wealth, earth, equality, trust. And each of you have a different relationship to each of those, solving those 5 human needs. So some of you care more about healthcare access for everybody in the United States. 47 million people don't have it, at least for a couple more years. Some of you care more about earth in terms of what is the availability of water around the planet. Some of you care more about equality. You probably care somewhat about all of them. And these are dials that you can have on your own portfolio. And you can rate those. We balance them out, 0 to 20 on each. You can weight them as much as you want. So what we experience is that investors, whether they're family foundations, families, moms and daughters, fathers and sons working together on their portfolio, they want to know, what is the impact of my portfolio? What is that quantifiable impact? So that's one of the tools we provide. And what we describe in the book is a process by which you can go out and do that in the HIP Investor. So we bring that quantitative impact to it. And then because some of those drive financials higher or lower, higher revenue, lower cost, better tax position, those can have higher or lower weights on your own portfolio. So this is what's missing from the majority of investment that's deployed today, and the majority of advisors who look at this. They are seeking this, but they don't have the tools. So we help bring the tools and the framework. It is deployable today. It's not going to take as long as what Ron described, because there's accessible information today. Companies are publishing information about their environmental, social, governance, and human impacts today. They are mappable into financial statements today, and we just need to ask our advisors to go do that. So my challenge for the group is, when you leave this meeting, if you have an advisor, go ask them. If you have a financial institution like Schwab or E-Trade or Ameritrade, call them up and ask them, and start creating demand, because the only thing preventing this is not a technical solution. All of us are up here with a technical solution. What's missing is the human behavior need to go out and do it and start voting with your own portfolio, like Ron's already described.
And I'll just tag on to Paul's comment, because with all the work that I do with financial advisors, it's clear to me that the number one driver that is moving advisors toward this space is clients asking for this. And particularly if enough clients of an advisor ask to learn about impact, that advisor is going to figure out a way to deliver that back to them. Just one other thing, I think I do need to note a complaint on behalf of the rest of the panel, that we were not told that we could bring props. So Paul not only brought a best-selling book, but these cool, high-impact, handy-dandy impact glasses. So